the recording.
Okay, great. Go for it.
Starting now.
All right. All right, thanks for joining me today. Basically, this presentation is going to be Introduction to Advanced Fibonacci Time and Price Analysis. And let's get started. Now, I am going to explain more as we move through this presentation, but I wanted to give you an idea with these first few slides on what you can actually do with this type of work. So, first question that I'm typically going to ask you, with a slide like this is, what would have told you to be a buyer of Adobe in October of 2019? Okay, and of course, nobody's really supposed to be able to answer that question, but I'm going to show you what I do. So let's look at the next chart. Okay, so here's one of the price relationships that I found in Adobe, and it was basically a prior decline that was $54.87, and I projected that from that recent high, which gave us a projection down at this 258 area for possible support. Then there was another similar swing where we had this prior high to low swing on the daily chart of Adobe, and projected from that last high gave us 257.34 as a projection for possible support. But there's more. Third, we actually had a 50% retracement of a major low to high swing, and this just happened to overlap those other projections. That came in at 259.03. One more extension or price relationship that we had in this area was the 1272 extension of the prior low to high swing. Extended downwards, that came in at 259.05. That was the 1272 extension. And then one more price relationship. We had a 100% projection of a prior decline of $22.05 and projected it from this lower high for possible support, and that came in at 259.46. So in this case, actual low was made at 259.57, and this is what it ended up looking like. We basically had 5 Fibonacci price relationships within this cluster zone. We had 3 that were 100% projections. We had a 50% retracement, and we had a 1272 extension. When I find clusters like this, it identifies a high probability, relatively low risk trade setup. Okay, so I'm going to actually go and talk about each of the things that I use to actually come to this conclusion in Adobe. Okay, so one of the first questions that you might want to ask is, why would you use this type of Fibonacci analysis? And I'm going to tell you it's because it enables you to identify high probability, relatively low risk trade setups where the risk is clearly defined along with the targets. Oops. This work is good on any time frame and essentially any good market data. I mean, you can't give me a stock that has like 5 days of data. I cannot do analysis on that. But, if it's been around for a while, it has some good back data, then I can definitely do analysis on it. I have applied this method to stocks, ETFs, futures, and the Forex markets, and it works on all of them. It's also an excellent methodology to use with option strategies, especially in markets like we're in right now, okay, where there's a bit of insanity. I feel a little bit safer trading with options. And then also, you can see things in the market that you will never see just using indicators alone. Okay, so for example, that cluster that I showed you, I mean, that doesn't come from indicators. That comes from running multiple price relationships and looking for the clusters for the trade setups. All right, for anyone who's not familiar with the Fibonacci numbers, basically this is the number series, okay, where basically, you're multiplying or one number times the next will give you the next number inside of this, number series. And as you go out into infinity, that's what gets a little bit more interesting. Okay, so I don't actually use the number series in my analysis. I use the ratios derived from the number series. So let me show you what are the ratios are. Okay, so here, the ratios I use pretty much every single day: 382, 50%, 618, 786, 100%, 1.272, and 1.618. Occasionally, if it's a very, very strong move, I might use a 236 retracement. I do use 2618 as my target number 3 for any trend trade setups. Every once in a while, I'll use 4.236 if there's just some crazy move and you're just looking for a place where it could terminate. Sometimes you'll find that it will terminate around that extension. So I told you where the 618 came from. It's basically in between the Fibonacci number series, okay? But then the other ratios that I use for the analysis are all related, okay? So you can see here, for example, 100% minus the 618 gives you the 382. Maybe the square root of 618 is 786. Let's see, square root of 1618 is 1272. Also, the fun fact is that it's the base to the height of the Pyramid of Giza is the 1272. That's where it shows up. And you can just see how all of these ratios are related to each other, because I'm not only using 1618, I'm using all of those ratios, and I'm going to look for a confluence in the work to find the trade setups. So let's go over some of the basics, because I may have already lost some of you by now. But here we are, we're going back to the basics. So let me show you what I use. I mean, there really are no secrets. Here, Fibonacci price retracements, most of you would be familiar with. This is where for possible support, I'm running low to high swings using the ratios below, or for possible resistance, I'm running high to low swings using the same ratios. So again, here, measure a low to a high, run the retracements using these ratios: 382, 50%, 618, 786 for possible support, or you're running a high to a low and you're using the same ratios and looking for possible resistance. So let's look at a couple of examples so you know what I'm talking about. This next chart is in square. This is a daily chart. This is where I've measured a prior low to high swing and ran the ratios. 382, nothing happened. 50%, nothing happened. 618, you did get a nice move. But this is when you're going to ask the question, well, which retracement am I supposed to trade against? Do I buy it here, get stopped, buy it here, get stopped, and then maybe I go in the third time and get lucky? That's not really how you do it. There's a couple of different things that we're going to do to identify the areas that you really want to focus on. So let's take a look at another example. This is an example of a retracement high-low on a 30-minute chart of AMAT. Okay, so here, measuring the high to the low, running the retracements. I included 236 in this case. There was no real move off of that area. We did actually have a temporary move off of this 382. It's a little bit of a stall at the 50%, but the 618 is really where you ended up turning this market. Okay, so again, this is just an example of a retracement. It's not good enough as far as I'm concerned for a trade setup. All right, so let's look at what I like to call Fibonacci price extensions. Now, extensions are essentially retracements beyond 100%. You're still only using 2 points on the chart to come up with it. So you're still going to measure a low to a high, but instead of just using those retracement ratios, you're going to use the extension ratios. The 1272 for possible support if you're measuring a low to a high, or the 1618, down here if again, low to high, you're going to look for possible support. I'm using the ratios of 1272 and 1618 all the time. Or you can look at prior high to low swings, run the extensions for possible resistance, 1272 and 1618. So here are a couple of examples about extensions. Now here, this is a daily chart of Facebook, and I'm showing multiple extensions on this one. So for example, I'm taking a prior high to low swing, and we're going to look for potential resistance at 1272 or 1618. So here's the 1272. Actually, you had one early failure just a little bit below it, and then you did have a nice failure here after it hit the 1272. It didn't do anything at the 1618 in this case, but again, you just watch them for possible resistance if you're running the highs to the lows. Now, another example on the same chart, I took another high to low swing, and we had a 1272 target at 179.28, and market didn't really stall there, but we did at the 1618 extension of that same swing. So again, it's not always going to turn the market, but it's worth knowing where these levels are, because sometimes you're going to get some huge turns off of them. Okay, so those are some examples of extensions. All right, here's another example of an extension. This is in Intel. This is a daily chart. This is where I took a prior high to low swing, ran the extensions. 1272 didn't do anything. 1618 almost hit to the tick. Oh wait, I think it did in this case. 5085, 5085, yeah. So anyway, you want to be prepared. You want to ratchet up stops, especially if it gets into either the 1272 or 1618 extension. And you would have been stopped out, but hopefully with a profit. Now, let's see. I have another example of an extension, and this is actually, it's a pretty old chart, but it is a weekly chart of CMG. And way back when, when this market was straight down, basically I took the low to high on the weekly chart to watch for areas where it might terminate the decline. No such luck at the 1272, but very, very close as far as the 1618. So it looks like 262.71 was the 1618 extension of a major swing of $146. You can multiply that by, the 1618 and then subtract it from the high, but obviously most of us just use the computers because almost every package has Fibonacci tools in it. Anyway, so you want to remember though, moves tend to terminate at extensions of prior swings. Okay, so we ended up, I think we saw a much healthier rally than what I'm showing right here. But bottom line, this is again just to show you an example of an extension, and in this case to look for support. All right, so we have retracements, we have extensions, and now we're going to look at price projections. This is the third type of price relationship that I use. And this is where you are using 3 points on the chart to come up with these levels. So for possible resistance, I'm going to measure a low to a high, and then I'm going to project from another low upwards for possible resistance. Or I'm going to take a prior high to low and project downward from another high for possible support. And I'm using 100% as the ratio all of the time. And sometimes I will add 1618. But the reason why 100% is so important is because that's what gives you the symmetry projections. And symmetry by itself is actually a very simple yet powerful trading tool. And we will go through some of those examples also. But let's look at projections. So this next chart is a daily chart of crude oil. And we had a prior high to low swing that was 312. And then when the market rallied, I projected 100% of this prior swing along with all the other ones. I'm just not showing those in this example, but I would run all of them when I actually have to do the analysis. But in this case, I just wanted to show you that this swing was very similar to this swing because this was 311 versus 312. Okay, that's symmetry. The definition of symmetry is similarity or equality when comparing swings in the same direction. And you use it most often, in the direction of the trend by taking the prior corrective declines within the uptrend, projecting it from any new high to look for the next possible support. And, it works a high percentage of the time. You're not just going to step in front of it, though, if the market's going straight down into a level. What you're going to do is you're going to wait for what I like to call a trigger. And I will show at least one example of that. All right, let's look at another projection where you're using 3 points on the chart. This is actually a 60-minute chart of Google. I measured a low to a high swing and then projected from a low. Now in this case, the 100% or symmetry projection didn't do anything. We actually gapped up through that. But the next projection would have been the 1618, and that ended up capping the move in this case. Okay, so again, we're looking for, you know, potential support, potential resistance. All right, here's another example of symmetry. Symmetry is similarity or equality when comparing swings in the same direction. This was relatively recent. This is where we had a nice little, is this for real? 91-point rally. Okay, so when the market started trading back down, of course I'm going to take all those projections on the left and project them from the new low to look for the next resistance. In this case, I'm just showing you the one here for the example. And this low to high, or actually this projected 3097. The actual high was 3096.25, and this swing ends up being 90.25 points versus 91 points. That's symmetry. And when it got up into that area, if you knew it was resistance, you go down to a lower time frame chart and you look for a sell trigger. Okay, and I know that my day traders are using like 377 tick chart to trigger entries against levels like this. And then know that your risk, or your initial risk, is going to be, you know, either above the high made prior to your sell signal or above the zone, which is above 3097. That was literally a 243 point decline after that. So that is definitely recent markets. All right, let's see what else. All right, so my most powerful trade setup is called the Fibonacci Price Cluster. And the definition of a cluster is the coincidence of at least 3 Fibonacci price relationships that come together within a relatively tight range. So let's go back to, you know, that example that I teased you with in the beginning, which is Adobe. So you had all of these levels, so you're supposed to, you know, just buy it and place a stop underneath here. Well, some people would do that, but personally, I wait for triggers, and I have you wait for triggers because triggers will filter out a lot of these setups that are never going to go anywhere. So let's look at the next slide here. Okay, so again, how you trade this, we need a trigger. So we don't want to look for a trigger on the same time frame chart. You want to go down to a lower time frame chart because you want to get entered into the trade setup relatively close to where your definition of risk is. Okay, so for example, this would be what I call a swing trade trigger on a 30-minute chart, and it's where you have both the 834 EMA crossover to the upside, and you also take out a prior swing high. So I want to see the pattern shift also. So basically the pattern shift is, you know, I'm looking at this pattern of lower lows and lower highs. And for me to see, you know, a shift in pattern, I wanted to take out a prior swing high. So once it does both, that's my buy signal. And at that point, you know, you can get involved, you know, whether you trade options or, you know, the stock outright, and your initial stop needs to be either underneath the low made prior to the buy signal, which would be this low, or below the low end of the cluster, which is, you know, on the other chart. But once both those things occurred, you know, that's when you started to see the nice healthy rally. And I basically use triggers for confirmation that it's worth placing a bet against one of those zones. Okay, here's another example. This is in Apple. This is on a daily chart. This was actually, yeah, last October. And again, it's it doesn't have a ton of price relationships in here, but you know, guess what? 3 is enough for a cluster. But what we had here in Apple was a prior decline of 1247, another decline of 1344, and we projected both of those from that high. It also just happened to overlap a 50% retracement of this swing and a 1272 extension of this low to this high. Okay, so it gave you a cluster of 214.13 to 215.75. Actual low was made at 215.13. It triggered entries, on, 15-minute chart, 30-minute chart, and all that good stuff. And the rally off of, again, a cluster here was just about $35. This next example is Amazon on the weekly chart. Okay, so when Amazon went psycho a while back, I had to back it up and look at the bigger picture work because, the work on the daily charts wasn't really giving me enough information because I couldn't see enough of these back swings. And you will find that, many swings are similar to other swings on the same chart. I mean, this swing is 365. This swing is 364. This swing was 290-240. This swing was 290-229. Now you had an initial bounce off of this area, but it never went to target. In Amazon there, but then when we ended up making the lower low, it was also, let's see, there was symmetry. There was symmetry with prior swings. You can see this area at the 1671.40. We had, it looks like, 2 symmetry projections, a 1618 extension, and I believe it's a 50% retracement. But when all of those things come together, you want to watch for a buy trigger, because if it holds, the potential upside target is huge. Now, the second time it held this lower zone, and after earnings, we met target number 1. I mean, that was a huge rally. That was $232 off of symmetry plus a few other price relationships. So that's Amazon. Here's another example of a setup in Amazon, but this is on a daily chart. And here, what I've done is I've taken some of the prior high to low swings and I projected them from this last high for the next possible support. And why do I want to look at support? Because you had a pattern of higher highs and higher lows. So, if you're trading in the direction of the trend, that's what you want to do. So we had the 2 symmetry projections, and then very simply just a 1272 extension of this low to high swing. Gave us this as support. It hit, it held, it triggered entries, and then this was after the, earnings. We had that crazy earnings recently. All right, so let's look for a couple of other examples. This is a really good example of symmetry. This is in the Dow Diamonds. This is where we had some swings that were similar to others. When you have a huge pullback like this, I have to go back to, the prior swings to look for similar swings to help me identify an area that might offer support. And we had, let's see, these couple of projections of prior swings projected from the high that was made in July. Gave us support. It was tested once, it was tested twice, came back and retested it a third time, and this chart doesn't do it a justice because it went way beyond the upside targets. Okay, but again, simple symmetry to help you get in, in the direction of actually the larger trend in this case. This is an example in Disney on a weekly chart. Okay, sometimes, if I don't have enough information on a daily, I back it up to the weekly and see what I can find. And in this case, I had a prior decline that was $19.90. I had another decline that was $19.85, and I projected both of those from the high that was made in August. That gave us this area of support around the 127 handle. This decline was very similar, to the others. It was not a perfect hit, but it was close enough as far as support. It held, and it met target number 1. That was a rally of $25.87. And again, pretty much based off of simple symmetry. All right, here's another example. This is an oldie, but it is so good because, you can't make this stuff up. So this was Sherwin-Williams. This was on a weekly chart. And here on the weekly, I found that there was a prior decline that looks similar to what we were seeing over here, and that this was $76.08. I had another decline that was $73. I basically projected both of those from the high that was made in January, projected downwards for possible support, Gave us what, the 359, 362, 15 area. And again, not a perfect hit, but close enough. 362.36 was the actual low. And we ended up making 2 targets to the upside. And notice it nailed the 1618 and then failed miserably. Okay, again, a good reason to always ratchet up stops when you get near extensions of prior swings. But what's also really interesting on this time frame chart is the fact that this decline was 15 weeks, which was equal to this decline. So not only did you have price symmetry, you had time symmetry with a prior decline. Okay, and when you have time and price come together like that, it's definitely worth looking at. All right, let's see. Tesla. So, Tesla's been fun recently. And, there was a way to kind of catch the support over here. And again, simple symmetry. This decline was $35.13. This was $35.14. This was a little bit less at $34.10. But the general area of support, which also overlapped some other, price relationships, it basically hit, held, triggered, and you remember what happened, right? That's Tesla. Let's take a look at, I have an example on Facebook, the daily chart. This is, again, using symmetry. This is where I took some prior high to low swings and then projected them. And I would have done all of them. I'm just showing you the ones that gave us this particular low. But you had a couple of projections from that last high. And then there was also a 1272 extension of this low to this high that just happened to overlap that area. So if we were going to resume the rally, that was one of the areas that I was looking at for buy triggers. Okay, and you ended up with an initial rally of 29.58 from a couple of symmetry projections and an extension. And then this is one that just started to fully play out. Actually, we met 2 targets in TLT. This is a weekly chart in TLT. This is also a price cluster, but it's a 2-step pattern, which includes a price cluster that we had in TLT. Now, one of the projections was, I took 100% of this first swing down, projected it from the lower high. And then we also had a 382 retracement, another symmetry projection from somewhere else, a 786 retracement, and a 1272 extension. So 2-step pattern into a support cluster. Now, the initial rally was nice, but then it started to falter. But since the original support was not violated, this was still a valid setup. So once there were renewed buy signals, we went back in on the buy side, and we did make, we met 2 targets on the upside, okay, because the high was made actually, I think, a couple days ago. So that's TLT example. And then we've got a counter trend decision in LVS as an example. Now, one of the things that I've already told you is that many moves tend to terminate at extensions of prior swings. So I had this high to low extended, and then this high to low extended. So you had a 1272 extension of one swing, the larger one, and a 1618 of the smaller one. They just happen to overlap each other. And then the other thing you can do is you can compare swings in the same direction. And I also found some symmetry here. And this is where we ended up with a cluster at 73.90 to 74.61, and hasn't looked back yet. Okay, but counter trend trades, they're not for everybody, but if you're okay with them, you can look at some of those too. Okay, so I'm kind of done with those examples for the price work, but let's move into timing. So I use the same ratios that we use on the price axis of the market, and I apply it to the time axis. For example, I will measure the time between a prior high to high swing and then multiply that time by the ratios and project the results in the future. When we see time clusters, we look for a possible change in trend. Okay. Also, when time and price come together, as you saw in a couple of the other examples, you have a much higher probability setup. Okay. Let's take a look at some examples. Now, this is actually out of the Dynamic Trader program from my mentor, Robert Miner. And this is where I'm able to mark the highs and lows on the chart and then project forward in time. And it will show me when something stands out. Okay. And here you had a standout. I projected from the last high for the next low. And the dates that stood out, okay, you can see these highest scoring dates came in between 227 and 229. So this was S&P cash. And what we wanted to do is anticipate a possible low between the 27th, 29th via this histogram. And also you can look down here and you can see this is where it tells you where the dates are projected from and what ratio came in. And then this is, you know, the result of that. So we had the histogram that you can show on the chart. Those are calendar day projections, which tend to be 1 or 2 days off from the trading day projections, but I do typically look at both, and especially when, you know, these overlapped each other perfectly. We had the 27th, 29th for a possible low in the S&P, and then we had the outright cycles came in the 26th through the 28th using the you know, the trading day cycles. So for example, taking a high to high, let's see, this is 1618, came in on the 28th of February. You have another high to high swing that came in on the 28th. You had a low to low swing, 100% came in on the 27th, and so on. You know, so you had all these cycles, and you know, it told you to anticipate a low. And of course, when you after you made the low, there were buy signals, and I'm not going to assume that we're going to make the upside targets this time around. You know, you definitely want to be careful because price is still below the 50 simple moving average, and the 513 are still in a sell mode. But did it give us a really nice time to look for a corrective rally? Absolutely. All right, so here's an example of timing just one cycle on Lulu. This is a daily chart of Lulu. So in this case, for example, if I'm going to measure a prior high to high and then project forward, this high to high was 37 trading days. Okay, so I wanted to multiply the 37 days by 1272 to show you where this came in, because 37 days times the 1272 is 47. So then this high to high was 47 days, and that's where the high was put in on the 20th. And again, I don't typically use a single level. I'm just showing this as an example for, you know, one of the types of time cycles that I run. And obviously you don't want to do the math by hand anymore, so most programs will do it for you. All right, and then, okay, after that, there was actually 5 cycles. Okay, so there was a high to high cycle, came in on the Feb 20th. This was a low to high cycle projected from the low, Feb 21. We had another high to high cycle, 1272, Feb 20, and that was the one that was the single example. We had a low to low, 618, 21st, and a low to low, 1272 on the 21st. Okay, and again, that was when the high was made. So when you see a cluster of time cycles, be prepared to ratchet up your stops. If the market takes you out, you know, fine. But if it doesn't, you know, that's fine too. You know, they're not always going to turn at these cycles, but when you have such a confluence like this, you definitely want to be prepared for a possible turn. Let's look at a couple more. Okay, so here's an example of timing that I had on a GDX chart, and it just happened to coordinate with price work. So price and time coming together. We had the price support 2746 to 67, and it had 4 cycles. Okay, 14th, 13th, 13th, 14th. So yeah, 4 cycles here as we were testing key support. This was your initial rally, didn't make the full target until later. It did retest the old support here and did re-trigger on the buy side. Tesla. Okay, so Tesla, you know, when it was going straight up, I did want to know when this might top, because I had a lot of traders that were definitely trading Tesla, and we had 3 cycles on February 4th. We had, looks like a high-to-high cycle, 100% February 4th, and then I believe another high-to-high cycle, 1272 February 4th, and then a low-to-low cycle February 4th. So 3 cycles, and you know, you had that spike up, and we haven't taken that out since. But I'll tell you one thing, you know, if the market's trading like this and you're in it, you definitely want to be aware of these cycles. All right, and then just a few more slides here, and then I think I have time for taking questions if that's part of the format here. But here is the S&P Cash Weekly chart. One of the things that that I was going over in my updates was the fact that I had 1, 2, 3, 4, 5, 6 cycles in the month of February as the market was going straight up into it. Now, there are a ton of time windows that the market has just blown through this year, or we've only gotten micro pullbacks. But because this is on the weekly chart, I thought it might be a little bit more important. But if you're looking at these cycles as plus or minus a bar, well, that makes this a huge time window because these are weeks. So plus or minus this 3-week time window gives us a 5-week time window. That's not helpful by itself. Okay, so what we actually had to do was then fine-tune it down to the daily chart, and this is where the timing came in that overlapped the weekly timing, where I mean, these are just some of the smaller cycles, but between 218 to 21, actual high was made on the 19th, you know, and here are the cycles. You can actually go back and, you know, find those yourself also. And, you know, that was kind of the heads up that we might be terminating the move. And, you know, when the 5 crossed below the 13, that's typically, you know, a get out signal. All right, and let's see, I think, okay, I do have one example on time symmetry. Well, you actually saw one before in Sherwin-Williams, but here again, it shows up all the time. You just have to find it. So here we had a prior low to high swing that was 18 weeks up, and I compared it to this low to high swing. This was 18 weeks up. Okay, so a lot of times, you know, the time of swings will be similar to others. So we watched that. And not only did we have the time symmetry, you also had price symmetry. 202.38 was the projection from this low to high, projected from here. And you basically had time and price come together at the same time. And at the time that I took the snapshot, it was already down $37 from a simple symmetry setup. And then, let's see. Okay. Amazon on a 30-minute chart. I did want to show you what is also possible, because you can do intraday timing. If there are decent swings in the market, I can use that same histogram and run timing. And in this example, this was, you know, I was using these highs and these lows, running the time projections from the last high for the next low. Here's where the histogram said to look for a low. It was testing support at the same exact time, and this happened pretty quickly. I think this took 2 days though. So we had time and price on the 30-minute chart, and I'm sure it triggered on a lower time frame chart, and it did make at least the 1272 extension, and that was a rally of 47.47 off of time and price. How do you trigger an entry? All right, so that last chart, if you would have went down to the 1-minute chart, okay, so here's where it was holding above support, and then once you had the 834 EMA crossover to the upside, and then also took out a prior swing high, which actually was this swing high, then that was your buy. That was your buy in Amazon. Your initial risk would have been underneath this prior low, below 1890. unless you wanted to actually put the stop underneath the low end of the zone. Okay, so nice little rally, not a ridiculous amount of risk, and there was definitely a healthy move off of this. I did not have a couple of the examples of when the market just blows through these price relationships, but be aware that it happens all the time, and it happens every day on different time frames. This is why we want to wait for triggers that tell us that it's worth, that it's actually worth placing a bet. And I'm pretty sure that's my last slide. Yeah, that's it. Okay, so I do have, I do have some time for questions, or I'm not sure if you actually have time. There might be somebody on. Oh wait, actually I'm the last video. So does anybody have any questions? Okay. What does my Fibonacci show on the S&P based on today's close? I don't really care about the close, but I'll show you what I have in the chart. Okay, so after we had the time and price low, on the daily chart, I don't really have much except for the fact that we do want to watch for possible failure around the area of the 618 retracement. But if this low is more important, because we did have timing there, as far as price, I think there was just a big old 50% retracement on the weekly chart. But if we can push through and get back above the 50 and get the 5 and 13 to flip back to the buy side, which it has not, which is why I'm being prepared for a possible failure. But if we do push through it, my target is 35.39. Okay, but again, I'm not making the assumption that it's definitely going to get there, but that's the typical target that we shoot for. And it has happened in the past over and over and over again. Yeah, if I talk slower, it doesn't really make a difference. I know that it seems like I go very fast, but I did have 51 slides to get through, so my apologies, but you can actually go back to the video and go through all of these examples again. But let me also take a peek at the other, there are going to be other decisions, for example, that we're going to look at, and like one example here is this is a 120-minute chart on the S&P futures. One of the things I found is I did have some time resistance here, so I just tell people to ratchet up stops if you're long. But there's also a cluster decision here that you're not going to see on the daily chart, and it comes in from a high to low extended to 3181, a 786 of another swing, and then the 618 retracement. So if we trade up into this area, that's a sell setup. Okay, is it going to trigger an entry? I don't know, but that's the type of thing that we will look at on the lower time frame charts, and we'll go even lower down to sometimes a 5 or a 15-minute chart. Okay, a question is the next. I don't have the next timing for the GDX. I did not run that. As far as which software counts the time cycles? I used to do it by hand. I grew up with paper charts on the floor of the Chicago Mercantile Exchange. I had a proportional divider that let me do, the retracements on the charts. Okay. But I use the Dynamic Trader software by Robert Miner, who pretty much taught me almost everything I know. And let's see. And yeah, so I used to do it by hand. But the Dynamic Trader does the timing cycles from both 2 points and from 3 points. Thinkorswim also does the timing from 2 and 3 points. And I don't know that TradeStation does, and I'm pretty sure that NinjaTrader does, because I know that I worked with them on some of the tools. As far as what is my win-loss ratio, I don't have everything documented, but I'm going to say that if you see a cluster with a trigger, I I mean, I would just say it's at least 60%. There are going to be plenty of trades that get stopped out, but the ones that hold and, you know, move for you, that will make up for it. So, for example, I had time and price at this last low in Tesla the other day. I didn't know if it was going to hold, but we did test and hold the support, and yeah, it looks like nothing, but from that low to this high, that's 195 bucks. Okay, question is, what is the what is the tool called in Thinkorswim? Okay, I'm pretty sure I did videos on how to set up the a couple of the things on, or at least the price work. But here, if you click on the middle mouse button in Thinkorswim, and there's going to be Fibonacci time ratios is the timing from 2 points. So if I clicked on that, I'd be able to like measure a high to a high, and it will, you know, give you all the cycles forward. And then let's get rid of this though. And then you can click on the middle part of your mouse, and Fibonacci time extensions is where you do the timing from, you know, you'll use 3 points on the chart. So where you're comparing swings in the same direction. So for example, let's choose that and say, okay, I'm going to compare this low to high swing in time. Whoops. You know, I really don't like this program that much, because if it takes 3 tries to get it to stick, it's a waste of time. Okay, so there I'm comparing, you know, 2 swings in the same direction, and then this will tell you where that's equal, you know, at the 100% on March 5th, for example. This is an intraday chart though. But those tools are available, and then the Fibonacci retracements were here, and the Fibonacci extensions where you use 3 points to actually get projections. This is confusing because they call it the extension tool. I call it the projection tool. Okay, but it's going to give you, it doesn't matter what, you know, what it's called. It just matters that, you know, if you're running symmetry, that you're allowed to use 3 points. Does TOS allow to do timing on intraday? Yeah, I mean, you can do it on the intraday chart, but it's very messy, and it doesn't have a histogram like the dynamic trader. It just has, you know, the timelines, but you can put those on a chart if you have time to do it. Which were you talking about as far as? Oh, you mean which swing? It was just for an example. You know, I wanted to compare a swing that looked kind of similar. I mean, you would also do this one, that low to that high, and then project it from there. Okay, let's see. Are there any other questions for me? Okay. Well, one other thing you ought to know is that I have a YouTube channel, and I've started to put quite a few free videos on that, and there's actually like 2 hours worth of videos on the dynamic trader that goes over some of the timing work. But let's see. Well, you know, give me a chart that you want to look at. Oh yeah, the YouTube videos are available to everyone. Let me just get my channel, and I can post the link here. All right, here we go. Yeah, so that's the YouTube channel. And also I just did, you know, today I just added the one on timing cycles, what to look for, but I haven't done the you know, more of a class on that. But there's There's a whole video on symmetry that I did yesterday. TOS projection tool is on there, TOS retracement tool. And then the triggers, the day trading plans and triggers are on there. But you have to go, I think on the first page it only shows a few videos. You have to go and look at the rest of them. There's also dynamic trader videos and also an introduction to, an older introduction to Fibonacci time and price. Okay. I don't, when I'm working, I don't do I don't do stuff that's underneath 20 bucks as far as analysis. I can look and see if there's anything as far as timing. Not really a great one to work with. Okay, XLE, I don't know. Well, in XLE, okay, I know I have timing via the histogram because I've done the work on it recently, but let's look at some of these cycles and see. So I'm going to do it as if we're looking for a low. So I'm going to look at prior low to low swings and see if anything comes in. Nah, nothing till March 12th there. Let's try another low to low swing. Don't really have anything until March 10th. I'm also going to look at the high to high swings. So let's see, this high to this high, will that give us anything? No. This high to this high. Okay, so that high to that high, that actually gives you a 618. That was close. Now when I look at timing, I always look at it plus or minus a day. So actual low was made on the 28th, and then Monday was March 2nd. So that was within one trading day. I would also, well, this is going to be too far forward. Let's try this high to high swing. Okay, you had a 1272 on March 3rd, so now you have March 2nd and March 3rd. And then you can also look at, let's see, I may try a low to low from an intervening high. And then I only look at, well, 1272 doesn't come in until March 12th. And then we can also compare swings in the same direction. That's where we use the alternate time projection. This swing, let's see, this, yeah, that's a very small swing. Yeah, that was 25 bars. Let me just see if there's any that are similar. That's 13. May not have too much that's similar. Yeah, that's 14 bars. This is 7 bars. Now that would have been similar. 12 bars. So really the only one in there that was kind of similar, let me just check this one. Like that high to low, that's 11. Yeah. So the 7 days. So that's where you would measure this high to this low and then project, from this high. And that would have given you March 2nd. So we had 3 cycles, March 2nd, March 3rd, March 2nd. There's a couple others that, depends on what the market's doing into it. Between the 10th and the 12th, I have a couple of others. Now, the only other thing we could probably do is low to high in timing. So, because I did lows to lows, highs to highs, I didn't do low to high or high to low. So let's look at that low to this high. No, that was too far away. So nothing there. And then let's see, are there any other swings that make sense? I did that low to high. There's another low to high swing. Okay, it looks like this one, if you took the low to the high. No, that was the 27th. Oh, but it does give us another date on the 12th. So now you can see where the 10th through the 12th is starting to look interesting after the fact that we have made at least a short-term low with the other cycles on the 2nd through the 3rd. So anyway, that'll give you an idea of what to do. Apple did the pop on the 50%. Well, Apple, for me, had timing for low, you know, along with the indexes, and showed the 27th, 28th. And it was actually on top of, I believe, a 786 and a 382. And we have already cleared, yeah, the 618 here. So I don't really have any hurdles now until, you know, 312.55. And if you can push through that, we're going to look for 347.29. Okay, well, I need to, with this market, go out and have a couple of cocktails. So I'm going to stop it here. You can reach me, well, Twitter at Fibonacci Queen or FibonacciQueen.com. And then I believe that there are a couple of other links that are hanging around if you want to get in touch. But also definitely check out the YouTube video. Alrighty then. Thanks for coming.
All right, thanks, Carolyn.
Thank you.
Thank you so